Started.
This meeting is being recorded.
Good evening, everyone, and a very warm welcome to another session of the Labor Codes webinar. And I have a pleasure to have with me in this session Mr. Anujit. Anujit is the CEO of Swatantra Microfinance, which is a part of Aditya Birla Group. And the key focus of Swatantra is to ensure that it empowers rural women entrepreneurs with micro loans and substantially so that they can become independent as far as the economics is concerned. Anujit's leadership has been phenomenal in Swatantra Microfinance, where he transcended the entire company from 13 employees and 6 branches to over 4,000 employees now and 490 branches across 17 states. So welcome, Anujit, and it will be a pleasure to have your perspectives on the changing legislations on the labor codes and how it is affecting the industry. Thanks for being with us, Anujit.
Sure. Thank you, Sumit. Thank you. And it is in fact interesting that you are inviting CEOs for the perspective instead of HR heads whose domain this primarily remains. But yeah, nonetheless, this will be an interesting conversation.
Wonderful, wonderful. And I've got with me our subject matter expert, Mahesh, who is the brain behind the entire decoding of the labor codes technically, and our central operations head, Rajiv, who's with us. So thanks, Mahesh and Rajiv, on this. Mahesh, I think we can start.
Sure. Sumit, I'll start sharing the screen. Hope my screen is visible to everyone.
Yeah.
Yes, Mahesh.
Yes. Good evening, everyone. Yeah, we all are gathered today to discuss on the labor codes, upcoming labor codes, and we are going to have more insights from our CEO perspective. So I'm going to run through the slides, and our CEOs are going to give you the perspective how this changes and how it is going to get impacted to the each and every establishment, where all the employer has to focus more in terms of the financial liability and other related compliance, which will give a more insight by our CEOs. Move on to the labor law landscape. Here in this slide, I have categorized into what all the central legacy labor acts which have been subsumed under the new labor codes, which is the upcoming 4 new labor codes. There are 29 legacy labor acts have been subsumed under the 4 new labor codes, which I have in the subsequent slide. 4 labor codes. 1, the Code on Occupational Health and Safety. There are 13 labor legislations, labor acts have been subsumed under the Code on Occupational Health and Safety. And there are 4 acts under Code on Social Security. 4 acts which are the major acts are under the Code on Social Securities, Employee Compensation, Employee State Insurance, and Employees Provident Fund and Miscellaneous Provision Act, Employment Exchange. There are 9 central legislation have been subsumed under the Code on Social Security. Coming to Code on Industrial Relation, there are 3 labor legislation, which is the central legislation have been subsumed, which is Trade Union Act, Industrial Employment Standing Orders Act 1946, and the Industrial Dispute Act. These are all 3 acts have been subsumed under the Code on Industrial Relation. So coming to the Code on Wages, there are 4 major acts which deals with the wages part, which is Payment of Wages, the Minimum Wages Act, and the Payment of Bonus Act, and the Equal Remuneration Act. This all 4 acts majorly deals with the wages part. All this wage act has been subsumed under the Code on Wages. So we are
just be on that slide.
Sure.
Anujit, your thoughts on this, because we see that there are a lot of laws or acts. For example, the Compensation Act is 1923, which is almost now 99 years old. And world has changed so many times in these 99 years. I mean, generations I think around 4 to 5 generations have come into the workforce and all that. So that's become very more important for us to, as a from organization's perspective, to get these changes, right? What are your thoughts on that, Anujit?
In fact, like Mahesh just mentioned, there are these 19 laws which have not just been subsumed into 4 codes, but they have been rationalized, they have been transformed, and they have been made contemporary. And like you mentioned, 99 years is a long time. In fact, businesses, environment, economy, everything has changed since 1991, which was liberalization. If you look at the last 10 years, where internet and handheld devices have brought in many other jobs like gig jobs, I think this couldn't have been more timely. We understand in a democracy like India, consensus building between states and center and various stakeholders takes time. But nonetheless, it has now come, and we are all waiting for this to be notified. But this is in the right direction for sure.
Right, absolutely, Anujit. And we see some of the industrial relation, like Trade Unions Act was 1926. So I mean, the way in which industry was run at that time, it was more labor intensive. Now it is more automated. The kind of skills that are required, the level of education, the technology that has come in over last 20 years itself is phenomenal, and this like goes to a pre-independence era. So absolutely, very important for us to actually appreciate that all these 100 years we've been living with these kinds of laws, and now that we've got a chance that we'll move to a step change and as we enter into the new era. So, yeah,
Yes.
Mahesh, please.
So today we are going to focus more on the code on wages. Explicitly, this is the 4 applicability part. Why we are going to cover on the code on wages, as I rightly mentioned, where employer or the industries are having more liability or in terms of financial implication to the employer. So here in this slide, the applicability part, what is the existing provision and after the implementation of the code? So what would be the difference which we have bifurcated here? Coming to the applicability, there are 2 applicability. One is related to the applicability in terms of the establishment and the applicability in terms of the employees, how it is existing, how it is applicable. Coming to the Minimum Wages Act, it is applicable only to certain scheduled employment which has been notified under the minimum wages notification. Otherwise, the minimum wages shall not be applicable for all the industries or to all the employees, those who are out of or those who are not coming under the purview of the notification. But wherein in the proposed code, in the code on wages, it is clear, it is covering all set of establishment and all set of employees. There is no as such bifurcation, or this applicability lies only with the minimum wages notification or the industries what has been defined. So this has been lifted in terms of the Minimum Wages Act in the proposed code on wages. Similarly, Payment of Wages Act does not automatically apply. The section 2 subsection 7, like subsection 2 of 7, which clarifies that Payment of Wages Act shall not be applicable to many of the establishment unless there is a separate notification has to be published. So that also has been lifted in terms of the Payment of Wages Act to the establishment, and in the proposed code it has been clearly cited or precisely explicitly stated that this will be applicable to all the industries. The Payment of Wages Act is going to be applicable. Similarly, employees, there is a threshold. Currently, Payment of Wages Act shall be applicable who's drawing 24,000 of the wages. Where whoever is drawing more than 24,000 of salary and who's in a supervisory level, anything as such, they are not going to come under the ambit of the Payment of Wages Act, which is not going to be the case after implementation of the Code on Wages. So another act, which is Payment of Bonus Act. Payment of Bonus Act, 20 or more employees, which is applicable for the shops and establishment and factory where it is 10 or more employees, wherein now the empowerment which has been extended to the state government in respect of the threshold as well as the wage ceiling, the capping which is existing 21,000, wherein the empowerment has been provided this time in the proposed code. The state can take an empowerment in terms of increasing the wage ceiling part. Instead of 21,000, they can even make it to 25,000, 30,000 to bring more number of employees under the ambit of Payment of Bonus Act. Similarly, the applicability to the establishment, even they can reduce the numbers from 20 to less than 20. Also, the state has the empowerment to reduce the number of employees to, so that the more number of industries are going to come under the ambit of the Payment of Bonus Act. So these are all the changes in coming to equal remuneration. Again, to all establishment listed in as per section 1(3). Otherwise, no specific condition was not there in terms of the employee applicability, but Equal Remuneration Act also being applicable in under the code for all the establishment, wherein here only certain establishment has been cited, wherein that certain establishment limit also has been lifted, and it shall be applicable to all the establishment equal remuneration. So this is related to the applicability part, where they have brought more clarity, and they have been removed the ambiguity depicting that this shall be applicable only to a certain establishment or certain category of employees. Such ambiguity has been removed, and it shall be applicable to all the establishment and all the employees. You would like to throw some insights on this, Sumit?
Yeah.
Or can I move on to the next slide?
Yeah, maybe we'll request for some thoughts from Anujit on this, because when we are increasing the scope, or getting more and more organizations in the purview. Now, one, definitely it is helping the employees, because small establishments, especially Anujit, because you've got extensive experience in the rural, working with, some sections which have been like the women, groups, SHGs, which are there. So do you think it will increase that kind of a benefit to the end employee, or is it just, a more compliance burden for the establishments?
In fact, I was just thinking about it. Government will have to get on a massive, communication drive to make people aware of their rights, right? All of us are consumers. How aware of we as, urban populace of our consumer rights? So similarly, even if this comes into place, how aware is the worker? How aware is the employee in a very small establishment? Will remain a question. If the employee is aware of his or her own rights, what recourse does the employee have? And if the employee or the worker seeks a recourse, what could be the consequences in a rural setup? Because this is going to be a new animal. So on the one side, this is something which needs to be debated. On the other hand, the affordability of the establishment, because even a small establishment will come into the minimum wages will be applicable. So the affordability of that small establishment probably will also have to be looked at. So we'll have to balance both the rights of the worker and also the establishment. So that needs to be seen as and when this comes into play.
Right. Absolutely, Anujit, and that's where the expertise and the digitalization comes into the entire forefront. Because when we have got a digitally mapped process, then definitely the more predictability happens in the process, and also the ease of use, ease of doing business that comes in for the smaller establishments also. And traditionally, like Rajiv, we've been doing the compliances in a traditional way 20-30 years back. With these new laws coming in, I think we'll be more and more utilizing digitalization to enable the services and making the organizations of all sizes compliant.
Exactly, Sumit. And these changes are going to bring as even said by Mahesh, more transparency in terms of, because today even still the employer or industry is firefighting to understand the applicability of certain laws like Minimum Wages Act even or Payment of Wages Act, whether it is applicable to them or not. So all these changes will surely bring the transparency and clarity for the businesses. Yes. It's a very good move actually.
Yeah, from the subject matter expertise, Anujit, Rajiv, and Mahesh will because Rajiv is now 3 decades into compliance. So so that's that's how he's sharing his how in last 30 years the landscape has changed. Yeah. Okay, great. So Mahesh, I think we can move to the next slide.
Go on to the wage. So wage has Like as I mentioned, there are 4 labor acts have been subsumed under the code on wages, and all 4 acts like payment of wages, minimum wages, payment of bonus act, or equal remuneration act is having a different, they have termed it in a different, what do you mean by wage? So there was an ambiguity whether we need to refer minimum wages or we need to refer payment of wages, which wages to be considered, or how we need to have our salary structure, whether this is going to suit for our, if I look at it, the payment of wages definition, is that going to support in terms of the minimum wages? So there was an ambiguity. Even minimum wages, there are certain judgments which clearly cited that the minimum wages can be split into various components, wherein coming to the payment of bonus act has given certain exclusion. So there was a too much of ambiguity, and where the employers are, even today they are facing a problem in terms of having their compensation structure, how it should be. We're looking at all this parameter. Now the code on wages has come up with the wage should be a common for all the acts, and it should be, the definition should be common, so that it will be like for framing your salary structure will not have any impact. So that's when here the wage structure, if I'll jump on to the next slide, which wages section 2y, where they have given what is inclusive and what is exclusion in the wage structure, in the wage definition which is provided in the code on wages. They have stated anything exclusion portion here, very nicely they have portrayed the definition, that exclusion portion cannot go more than 50% of your wage. Wage is nothing but the basic DA retaining allowance, and if any allowances similar like basic DA or anything which is paid as a special allowance, which shall not have any substantial proof for that component, then shall be considered as a basic. So basic, and that will be considered as a wage. So that's when in the wage definition it is very clearly articulated that exclusion portion cannot go more than the 50% of your gross remuneration. So that in at any case, the basic wages or the wage should be 50% of your gross remuneration. But that is not the current scenario, where many companies are paying 30% of as a basic as your gross salary, or wage 20%, 25%. There is no proper the guidelines, or it is not clearly defined, wherein in the wage definition in the code on wages, it's very clearly defined that 50% the basic or the DA, basic and DA should be your wage. Remaining 50%, which can be excluded subject to the exclusion what they have cited in the definition. The exclusion portion which I have stated here, any bonus payable under any law, and the house accommodation, any contribution paid by the employer to any pension or PF, and majorly which I would like to highlight here is the HRA. HRA component has been excluded from the definition of the wage, and also similarly conveyance allowance and any allowance paid as a deferred special allowance. Deferred special allowance, anything which is paid. So those allowance can be considered as an exclusion, and remaining component or remaining salary component has to be considered as a wage. So doesn't mean here that the basic or wage has to be only 50, it has to be 50, but it can go even beyond 50 in case if you do not, or if your salary structure is not having any exclusion portion, which may be probably HRA or any conveyance allowance, which is amounting to 20% of your gross salary. The remaining 80% has to be considered as wage. So that's how the definition has been articulated or portrayed in the code on wages.
So, Mahesh, with this changes, that essentially means the kind of take home also of an employee will get affected, and if yes, then we will request Anujit's view on how how it will how the employees, especially the small SME employees, will take it.
No, I'm sure the take home might get impacted, and that will remain a challenge, right? So as a lending institution, for example, if you lend to a salaried person, we lend at a 50% FOIR. If the salary is 10,000 rupees, the EMIs could maximum be 5,000 rupees, right? Consider a person who is at that 50%, and now suddenly the take home reduces from 10,000 to 8,000 rupees or 9,000 rupees, right? So this is a very, very tricky situation, and will have to be studied very, very carefully.
All right. Right.
Yes.
Right.
That's
And-
when I have in the subsequent slide, I have created a sample salary structure illustrated so that it's interest of everyone and to understand easily how the salary structure, existing salary structure, and what could be the salary, should be the salary structure after the implementation of the code. Now coming to the salary structure existing, if basic is 6,000 and DA is 2,000 and HRA is 4,000, conveyance allowance is 3,000 and washing allowance is 3,000, amounting to 18,000 is the gross remuneration which is being paid to an employee. Wherein the current salary structure, the quantum of basic and DA which is not 50% of the gross remuneration, which is less than that. So when we switch over to the code on wages, then it should be minimum 50%. Then the quantum of basic and DA has to be increased to 8,000. Instead of 7,000, it has to be increased to 8,000. And remaining components, which is HRA, conveyance, and washing allowance, can be another 8,000, as we stated. Wherein here, the 1,000 rupees quantum has to be increased to the basic. So that's when once the basic and DA is increased, this subsequently the PF contribution, ESIC contribution, and gratuity payables, bonus payable shall increase, like financial commitment will go up.
Right, right. I think that is that's in a way is positive because the long term, the retirement part of it and the employee benefits part of it, which otherwise in some cases were getting compromised. Now that with the new codes coming in, at least that will be assured. But the take home in hand salary, the disposable income, if the CTC remains the same or the fixed salary remains the same, then the disposable income may have an effect basis on the pay elements or the pay components which are there of a particular employer.
Yes, Sumit, as rightly said by you, though there are chances of impact on the take home. But again, the social, because from the perspective of PF contribution specifically, it's a social security benefit enactment. So, but before, maybe I will say before 4, 5 years or 6 years back, it was very difficult for the employee even to withdraw the PF or to get the advance from the PF department. Today, that is not the case. Today, even they can simply file the online application and they can get it in a day or in a week time maximum. So if as an employer, I will educate my employee, then I think surely they will not take it from the they will take it from other angle. Like it is going to impact from long perspective, but from short perspective, they are going to get the less salary. But simultaneously, they have the option to get some advances in case of need. So I think it's a positive sign if you'll see it from the social security angle.
Right. Okay. Thanks, Ajit. Anujit, from your perspective, in the when you see extensively in the from the microfinance and from the industry perspective, and how do you see one impacting your the industry employees and also the end customers due to this?
If the total wage bill goes up, that will have an impact on the operating expenses. I don't see the end consumer being impacted because of this aspect. So as Rajiv rightly said, this is about social security. Rich economies can provide social security, health, education, and unemployment bonuses, for example. Economies like us, which are developing, cannot provide it, and hence this through this sort of a bill, the government is trying to provide social security. So that is, of course, in the right direction. Also on the ESIC front, in fact, you keep on hearing statistics like 80% of all the hospitalization expenses are out of pocket, right? So the insurance aspect, if provided to a larger section, also will be in the right direction.
Sure. And I think it will create a better long term benefit for the employees across the spectrum.
Certainly.
Sure.
Actually, it's one of the move to become the developed country at one point of time. So that is very important, because to become the developed country, social security benefit has to be on the top of everything.
Sure.
Yes.
Sure. Thanks, Rajiv. Thanks, Anujit. Thank you.
Move on to the impact. What all impacts, since the wage has been, there is a slight increase in the wage. So which all the acts or which all the contribution will get impacted, which here I have mentioned the PF quantum will increase. The quantum, how the quantum will increase is now, say for example, if the employee salary is 1 lakh, where his basic and DA is 30,000, wherein now after the implementation of the code, it has to be minimum 50,000 as the basic and DA. So in that case, the quantum towards the PF contribution will go up, subject to the ceiling. However, the code is silent on the ceiling. Current ceiling is 15,000, which is applicable for the PF. However, the code is silent on it, and they have cited the central government, the Central Provident Fund organization has to notify on the ceiling. So whether they'll continue with the ceiling or there will be a slight increase in the ceiling. So that we'll have to wait for that communication. Otherwise, if you look at it, the wage perspective, yes, the quantum will increase. The PF quantum shall increase. In place of 30,000, it is going to be 50,000. On the 50,000, the PF contribution has to be contributed. Similarly, the quantum shall come down in respect of ESIC, but currently the ESIC contribution being paid on the gross salary. Overall gross salary, which is again subject to 21,000 is the capping. Anything which is more than 21,000, ESIC shall not be applicable. Wherein here, in the code, again, the code is silent on the capping or the ceiling prescribed existingly, which is 21,000. Code has not provided any clarity. Again, they have mentioned that the central government shall notify whether to continue with the 21,000 ceiling or may increase the ESIC capping as well. But here, how the quantum shall come down is the ESIC has to be contributed on the wage, which is, as we have mentioned, as 50% of the gross remuneration. In case the exclusion portion is 50%, remaining 50% is going to be a wage, the ESIC has to be contributed. But otherwise, the existing provisions are, we have to contribute on the gross salary, which is overall salary of the gross remuneration of employee. The quantum shall come down in terms of ESIC contribution. So this will impact in terms of covering more number of employees. Now, currently, the ESIC applicability, as I mentioned, it is 21,000. So in case if after the code implementation, my the salary, gross salary is 40,000, wherein my wage is only 20. So though my gross salary is 40,000, I'll have to come under the ambit of ESIC. Since the wage, we have to contribute on the wage alone. So the more number of they viewed or they are looked into the parameter where they have to bring more number of employees under the ambit of ESIC. So move on to the
yes. Sorry. Even Anujit, if you would see till now there is no insurance in comparison to the ESI. So there is no ceiling, there is no limit. So there are multiple kind of benefits. So, but no insurance company is providing those kind of benefits. And again, it's a very good move because it's going to cover more number of employees in terms of, again, this particular benefit. So I think it's again a good move from that perspective. So what are your views here on it?
No, absolutely. In fact, for our customers, we run a product called as cashless Mediclaim. So we have tied up with an insurance company and we run a product. We have been doing it successfully for the last 5 years. We have settled claims worth 70 crore rupees through the insurance company. And it is such an impactful product. The workers, even our feet on street, come from the same socioeconomic background, right? And while companies like us also provide Mediclaim for our own employees, smaller establishments who can cover the employees or the workers through ESIC will be a huge boon.
Right. Oh, absolutely. Absolutely. And one thing that is very, very coming out very clearly is that the maternity benefit commitment could come down. So that is something that was viewed as more, by the government and also as India as an entire organized country to get more and more women into the mainstream, into the workforce. So do we think, Anujit, that this may have some kind of a dampening effect, or this is something that should be okay as per the new laws?
So can you just elaborate when you say commitment could come down?
I'll explain, Anujit. I'll explain. See how the maternity benefit commitment shall come down. currently the maternity benefit being paid to women employee on a gross, whatever the gross salary being earned, like maternity benefit again shall be applicable those who are beyond ESAC limit. Those women employees fall under the ambit of Maternity Benefit Act. So currently the employers are paying, or the Maternity Benefit Act precisely stated that it has to be paid on the gross. Wherein here in the code, it is clearly elaborated the wage has to be considered for all the commitment towards the gratuity payable or maternity payable and PF, ESAC payable, all the commitment towards the wage, what has been defined. Now, since the exclusion portion, in case if company is having their salary structure, as I mentioned, that 1 lakh is my salary, a gross salary, wherein I have a commitment of exclusion is 50,000 and remaining 50,000, which I have considered as a wage or a basic. So then what will happen? The maternity benefit has to be paid only on 50,000, wherein the existing process we are contributing, or we are paying on the total salary of 1 lakh. So that's when the commitment will come down in respect of maternity benefit.
Sure. So in fact, since the government wanted to sort of broad base the establishments for whom this would be applicable, hence they had to sort of lower the burden, and hence this decision. Otherwise, it would have been too much for the smaller establishments in terms of the maternity benefits. So I think that is the thought of the government when they are wanting to bring the commitment down a little.
Also, I would like to add, since they made one common definition, so though there is a impact towards maternity benefit, which will come down the commitment, otherwise other benefits, social security benefit as such, PF, ESIC, gratuity for the continuous services, and the employee compensation, which will go up. So that's when they have come up with the common definition, though there is a commitment which is coming down towards the Maternity Benefit Act.
In fact, the women participation in labor force, I was reading some report, Bangladesh is better than us, right? So this is one aspect, and this has direct impact on your per capita GDP. The more people join the labor force, more, of course, per capita GDP will be of any country. So I think we are currently at what, maybe $2,200 per capita GDP. Yeah. China is at $12,000. We intend to catch up very soon, or reach that level of about $10,000 of per capita GDP. And without the female participation, this is just not possible. So I think this is again a huge step.
Sure. Thanks, Anujeet. Absolutely, and all these codes are aligning towards that. And as we were discussing, that the more participation, and of course, Anujeet, from your organization's group's perspective, also entire group, Aditya Birla Group, also is working very, very closely towards getting the women empowerment, towards working with the sections of the society to get them into the mainstream. And I think this will be a major step forward for progressive organizations to actually further align and get the people along on the employment front.
Sure.
Thanks, Sumit. Moving on to the payment of wages. So here in the slide, what is the existing the provisions and how it is going to get impacted under the Payment of Wages Act? What would be the impact on the Code on Wages after implementation of the Code on Wages? So as I mentioned, the threshold has been lifted. 24,000 is the existing limit where the Payment of Wages Act shall be applicable, wherein the threshold limit has been lifted, and it shall be applicable to all category of employees. And another, the description which is related to daily wages, how the payment of wages has to be paid in case if employee has been engaged on daily basis, on weekly basis, fortnightly, monthly. So monthly existing, which is within 7 days, where the number of employees are 1,000, anything beyond 1,000 employees, which has to be paid on or before 10th of every month, like subsequent month, wherein here in the code, which they have removed the clause of 10th, the payment has to be paid within 7th, irrespective of number of employees. So the 1,000 above employees, which has to be paid on 10th, has been lifted in the code, and they made it as only one payment term for monthly payments. Fortnightly, again, within 2 days after the end of the period, and weekly, which is the last working day of the week, in case if we have been engaged from Monday to Saturday, on the Saturday which has to be paid. So one important thing which they have removed is which is 10th. 10th, the payment has to be made where you have more than 1,000 employees has been removed. Coming to settlement on.
In fact, Sumit and Mahesh, I am tempted to wear a lender's hat here. There are often cases where the date of salary for our customers is on 7th, and their payment is delayed, and that causes delay in their repayment. The repayment track goes for a toss. So this is, if followed to the T, will be absolutely beneficial from the customer standpoint and from the entire lending ecosystem standpoint.
Absolutely,
Yes.
absolutely, and people who are dependent on the timely payment of wages to further pay their EMIs or rents or other commitments, that all their payments will be recognized, and it will certainly have a good impact on on your ratios, Anujit, as a lender, certainly.
Actually, when there was an intent when they have bring in this clause at that particular point of time. Well, at that time, the if scale of the industry is more than 1,000, they need to prepare the manual record. They need to process the salary with the manual, or further they started with the Excel. So in Excel, today technology is there to support us. So we can process n number of employees' salary in minutes, in seconds even. So that is one of the intents, so that they have brought down the date as a standard date 7th of every month. That is one of the maybe other reason.
Yes, and
Yes.
Rajiv, good you brought in this point, because that brings to the technology that organizations are helping the other companies in making more compliant, and therefore how digitalization enabled compliance services is really taking the forefront right now for the industry.
Exactly, Sumit. Exactly.
Yes. So move on to the settlement part, which is section 17(2), subsection 2. Though it is a very good move in terms of the resigned employees, wherein they have stated the full and final settlement in case of separation or resignation, which has to be happened within 2 working days from their last working. So how it is going to be difficult for employer? Definitely, there is going to be a major kind of how the major companies are going to manage to releasing the full and final within 2 working days is going to be a typical task. But however, looking at employees, since employees leaving the organization, in case if he doesn't get the job subsequently, so you should have the amount, like the salary which he has worked in the organization. That's when they have mentioned the settlement has to happen within 2 working days for resignation or any kind of separation. However, gratuity which has been defined existing, the gratuity has to be paid within 30 working days of his within 30 days of his last working. The same has been adopted in the code on wages. Otherwise, there is no change in the gratuity act.
So Anujit, do you have any views here? Where I think this settlement within 2 working days is going to be the challenge for most of the companies. So what are your views here?
I don't think it will be a challenge. When it will be a mandate, the process will need to be re-engineered. More technology will need to be put in place. There will be a need for a lot of decentralization. So for large organizations like us with 6,000 employees, everything being centralized probably may not be the way ahead. You would need to create excellence centers, at states and regions. But I don't think this will be a challenge. I'm a huge fan of a lower tax.
Okay. When actually we were discussing with the client, so client were saying, because people are holding certain assets of the company, or they are holding certain advances of the company, so how they are going to recover it in 2 days. So all those challenges are, but as a team lead, as a compliance company, so we have a suggestion here, because intent of the law is to be reasonable when employee is leaving the company, to be reasonable in releasing their full and final. But again, if employee himself is unreasonable during the departure, so they can bring in the strong processes there. Like if there is a clear process, strong process, then and the company is meeting the intent of the law, they are holding it because they have a valid reason to do so, I think then law is going to support the companies. So both way, I think it is going to be beneficial. Yes, we have to bring in certain strong processes and system in place when we are releasing the full and final of the departed employee.
Sure.
So move on to the payment of wages continues, and certain deductions and recovery damages, which there are certain changes are there. Coming to the deduction part, it shall not exceed more than 50% of your gross remuneration or the gross earnings which you have earned. It shall not be any deduction from the wages. So the standpoint here, the code on wages and the existing act remain same. There is no change here. And coming to the advances, the even advance, though the advance being paid by employer to employee, that shall not be more than 50% of your wage. You can't recover more than 50% of your wage, what wage being paid to an employee. So coming to the deduction for damages or loss, which is section 21, the deduction for damages or shall be done only with the specific procedures, and it shall not exceed the amount of damage or loss caused to the employer. The damage or loss being done by the employee should not be more than that. The employer has to recover whatever amount has been incurred, like whatever amount has to be paid by employee. But wherein the more clarity they have brought in this particular section is, it has to be discussed. We have to provide an opportunity. Any deduction for damage or loss, it cannot be just like that recovered without any evidence or proper discussion happened or the opportunity provided to an employee, whether this was happened intentionally or it was unintentional. So employer has to understand and document it, and further the employer has to go for any deduction on the damage or loss which has been done to the to the company property. So move on to the point number 8, which is section number 8, related to the unpaid accumulation. Unpaid accumulation, disbursement, any salary or gratuity, anything which is payable to an employee which is not paid to an employee due to various reason, or employee has absconded or employee has not turned up for any reason. So for various reason, in case if amount is not paid, now existing, it says that the certain states have defined that you can hold it for 3 years and subsequently it has to be paid to the labor welfare board. And some of the states have stated it can be withheld with the employer for 2 years, wherein currently now in the code on wages, it is stated that the employer can hold it for 6 months. Subsequently, then further it has to be settled within 15 days from the date of his last day of the due period. And this amount has to be deposited to the deputy labor commissioner, which they have stated that after 6 months, within 15 days, which has to be paid, it should be to a bank transfer or to a DD. Wherein here they have brought in bit ambiguity. Currently, we are dealing with this unpaid accumulation with the state specific act, which is a labor welfare fund, where we have to deposit to labor welfare board, wherein here in the code it is stated that it has to be deposited to the deputy labor commissioner. We are not very clear on that, where further what would be the position of the labor under the labor welfare fund or labor welfare act, what they have been cited. So what would be the position, we are not sure about it, and we'll have to wait further clarification from the department. Otherwise, withholding the amount of the employees cannot be more than 6 months, and which has to be paid after completion of 6 months within 15 days, and it has to be paid through bank transfer at DD. Move on to the bonus. A bonus, as I mentioned, bonus is a central act and central rules, wherein now the framing rules has been, empowerment has been extended to the state specific. Now state has to come up with the bonus applicability and threshold. So that's when what will happen, the bonus payable will become a major concern for the employer, where he has to pay based on the state specific. In case if there is a difference in the ceiling amount or a difference in the threshold limit and the applicability of number of employees, then the bonus has to be paid to the state specific. So here the employer has to, or the industries have to have their the bonus calculation or the bonus provision as per the state specific. And one more important the change in the bonus is the bonus mode of payment has to be done only by giving bank credit, but currently it has been paid through bank, even the cash, but cash has been restricted, which has to be paid only by the check or a DD. wherein now under the code, it is clearly stated it is only by giving bank credit. So disqualification of bonus, section 29D. Currently, this position is not available in the Payment of Bonus Act, which is stated only anything for major or misconduct or writers, anything which is been convicted by employee. That's when the bonus will be deprived to pay to an employee, wherein now another clause has been introduced, which is a conviction for sexual harassment. Any conviction for the sexual harassment by an employee, then the bonus shall not be paid to him and he will be disqualified from paying the bonus. There's one more, the clause which has been introduced under the Code on Wages, the chapter of bonus. Any views, Sumit, Anujit?
No, none. I think payment of bonus through bank credit is also a welcome move.
Absolutely, and also it will bring a lot of transparency in the entire systems, and again, you know, it will be a fair, even if there is a challenge from an employee, it will be a fair discussion that can happen, and of course, you know, the employee rights, not only for the employee who's been given, the employer rights are also protected on this, certainly. And also, Anujit, from the visibility perspective, from the credit perspective, also we'll have the visibility in terms of how much, you know, person is supposed to get is due, or, you know, all that stuff is it's a welcome move from that perspective.
Move on to the equal remuneration. Currently, we are dealing with the two genders, which is male and female, and under the code, the transgender also has been included, and the transgender also has to be paid equal remuneration, and we should not discriminate such employees based on the grounds of the gender, and the transgender also has to be equally paid for the purpose of equal remuneration. Sumit, you would like to add here the role of the technology? Post that we can take it up for question and answers.
Yeah, certainly. I think we are almost near an hour, and we just covered one particular section of the codes. I think technology will bring more transparency, accountability, the adherence to the timelines, and of course, the traceability. Because when we see a change happening, a uniformity of that to be implemented across the country on in different units to the last mile is certainly very, very important. And the real benefit of this labor codes, the new codes, will go to the employees as well as to the employers in many cases, if it is implemented in the right spirit and consistently. So we are ready with our all our technology systems, team leads, HR tech, with fine-tune to the new labor codes, so that as soon as the labor codes are implemented, we can just plug and make the organizations completely compliant from the day one. So I think Mahesh, we can move to the next slide.
Yes, I'll move on to the legal updates. Can I add here, Sumit, the legal updates?
Please.
Yeah. See, there are legal updates which is being updated in our RegTech portal. All 28 states and 9 union territories, all related to the labor law updates, any circular or publications will be available in our RegTech, the RegTech portal, where we have also elaborated each and every the notification when it comes, what is the summary of the notification, how it is going to get impacted to the industries. So that has been narrated and which is available in our RegTech portal. And the real time within 24 hours of the notification, and we are sending this notification with the real time which will be notified to all our which will be display or which will be published in our RegTech portal, and all our our clients or whoever can have access, and they can look into the such notification in the real time based. Personalized, which is configured by the industry, category, frequency, and regulator, states, and UT and ministry. So these are all personalized, which we have. So compliance calendar, which we are also publishing compliance calendar, which will be more helpful for all the whoever going to look into our RegTech portal, and also our own product called Avacom, where you will have month on month what is the compliance calendar, what is the compliance to be met in this particular month, which can be viewed. And based on that, you can have your plan in terms of remittance, in terms of returns, in terms of preparation of registers. So which all will be available in our compliance calendar.
Yeah, absolutely. And this is to make a proactive approach rather than, when we know that, in next 1 month or 60 days, a certain compliance timeline is approaching. So we've got our own AI-enabled technology platforms basis on different industries, basis on different regions, the requirements in terms of the number of employees that can actually help. And currently, we've got more than 1 million employees who are using our compliance platform as we speak, so that they're up to speed on the present day compliances. So we are all ready for that. Just to to share with everyone. Yeah. Anujit, your thoughts on how technology can accelerate this and make this more more easy for industries across the spectrum?
Industries and companies do not have a choice, Sumit. They will have to get on the technology bandwagon because this is regulatory. This is going to be mandatory. Of course, there will be consequences of non-compliance. So technology is the way, because you just can't keep on adding manpower, and anything human is prone to error. So technology is the way.
Certainly, Anujit. Okay, so I think we've got about 6 to 7 minutes left, so we can take some questions, which Mahesh, you can, and Anujit,
I'll start reading.
Yeah.
Any idea when is this planning to be implemented? So it's a $1 million question. Yes, they have been like the central government. They were in process of implementing this labor codes by 1st July, wherein since there are certain states have not been published the codes rules. All 4 codes, the draft rules has to be published, which has not happened. That's when the government has not taken the initiative in terms of public or implementing the labor codes. So which may take some more time, but we are not sure about the timeline. But we are expecting by end of this financial year or by next financial year, April, there are chances that codes are going to get implemented.
But at the moment, there is no concrete information actually in place. So I think we have to wait and watch. But yes, from technology angle or from the legal angle, we have to be ready. And as a team leads, so we are completely ready for it. So once they are implementing it, so I think we'll be able to support our client on real time basis, immediate basis.
Move on to the question number 2. Compliance cost will increase drastically. Many small employers can't afford. So this is actually a vice versa. There are companies are taking advantage. Currently, there is no fixation in the wage. Since there's no fixation, there are companies which we have also noticed where they will fix 5,000 as a basic, where they don't even pay as a minimum wages. They take the opportunity or kind of loopholes looked into it, and they will have a different set of salary structure, which says that this will favor to the employer. Otherwise, it is not favoring to the employee perspective in terms of the bonus payable, gratuity payable, or PF payable. That's when the code is very clearly stated the wage has to be 50% of your gross remuneration. So otherwise, many of the companies are taking the advantage of having the basic is very less. That's when the liabilities will be very less in terms of contributing to the PF or gratuity. So it's a vice versa. We cannot say the compliance cost will increase drastically.
And even law, there is no choice in the law. So we have to comply. Number one. Number two, if whether small employer will be able to afford it or not, because once it will be implemented across country, so then so everybody has to create the costing in the same way. Like so, I don't think if it will be implemented in the real sense, then there will be any challenge for any employer. Yes, it's going to impact the costing further, the product cost. So that is there, but it's for everybody. So I don't think there will be challenge for any specific business.
I think
move on to the question number.
Yeah, we have a lot of questions, but because of we'll request our audience that we have captured these questions. You can also write to us, and basis on the very specific questions, we can our experts will be able to help you for complying, for getting the readiness, and also, getting you technology enabled for the new labor code anytime when they are added. So maybe Mahesh, you can have the questions answered offline so that we can have individual specific answers, the precise answers as per the law to help our audience on this.
Sure.
And with this, I would like to extend a vote of thanks to Anujit, who has taken a lot of after we were discussing to have this webinar for quite some time, and you've taken time out from your busy schedule, Anujit, to share your thoughts, because one is definitely the law, but second is how actually CEOs, how actually we as organization leaders are viewing this. So thanks, Anujit, for sparing time for this, and thank you, audience. Thanks, Rajiv. Thanks, Mahesh, for the wonderful session. Thank you so much.
Thanks, everyone.
Hello.